Ladies and gentlemen, with the COVID-19 scare, there is always a silver lining behind every disaster. During some of the most troubling of times, there were companies who've thrived massively, were able to help grow and push through the crisis like nobody has ever seen. During our current crisis, it's kind of hard to remain optimistic on some companies. How long will the virus last? How many people are going to succumb to its infection? And how long are you going to have to remain under a basic quarantine in your humble abode? While nobody has the answers to these questions, there are companies right now that are taking massive advantage of the fact that you are staying home. We're going to list 5 companies that I feel are going to crush their next earnings numbers based off of this COVID-19 quarantine. I am Mark Melnick. This is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. How are you guys doing today? I have something for you, but first, as always, my hand is out. I need something from you. I need you to pause on the next slide, read it in its entirety, and then hit play. Thank you so much for reading that. I appreciate it greatly. Now, I'm going to share with you today 5 companies that I feel are going to absolutely crush it on earnings. Today, for example, you have a company called, Shopify that basically says they're coming out and they are suspending their guidance. Shopify right now down just about 25 points. It was down a bit more after hours. Stock was down over $30 after hours as you see Shopify just plummeting as they said they're going to suspend financial expectations for 2020 amidst the coronavirus scare. And this is a very logical thing. I mean, what do you expect the companies to do? Hi, we don't know when people are going to be allowed outside. So instead of trying to predict that, we're just going to suspend it for now. And obviously, a lot of these companies, most of them are going to re implement them as soon as people are allowed outside. However, there are companies that absolutely are thriving like they have never thrived before based on this entire coronavirus epidemic. So I'm going to share with you 5 names, and we're going to start off with, you probably already guessed it, Netflix. All right. Netflix is going to have more user ads. They are whatever number of average, a number of users that they're adding to their subscription. I can practically just short of guarantee you that there's going to be so many people watching these shows. And especially the shows that are like really good right now. Like I'll spoil you one on Ozark. I'm not going to spoil the show, but what happens in it. I started watching Ozarks. I would normally never have time to watch Ozark, but thanks to this coronavirus, I have a chance to watch it. You have to realize that Netflix is going to become a major part of our culture like it has never been before. You have to realize that there's going to be couples who are going to be spending time together watching Netflix, and it's going to become a thing even after this coronavirus leaves. Right now, people are stir crazy. A lot of horrible things go on during this quarantine. The number of child abuse cases are exploding across America, and it's like, I can understand why. Because you have like, you're basically stuck. People are going stir crazy. Don't ever abuse your kids. That's a horrible thing, but like, I could understand why it's happening across America. And people are going stir crazy. But what's going to happen is what's happening with this quarantine, people are never going to forget for the rest of their lives. And people who are normally not spending time together watching Netflix are going to be spending time together watching Netflix. And after this coronavirus epidemic slash pandemic slash, you could call it Sally if it makes you sleep better at night. As soon as it ends, people are going to want to go back and watch TV together. Netflix, when they report their numbers, is going to be phenomenal. You're not going to find many companies out there right now where you have the exponential 8 moving average trading above the 21. Netflix has weathered this coronavirus like no other company. I'll put it this way. After it closed at 368.70 as the bear market started. I consider February 24th the start of the bear market, like the start of the decline, not where it was down 20%, obviously. It was still bullish then, but as it was like declining was February 24th. On February 24th, it closed at 368.70. The stock is 364.08 today and even hit as high as $380. I mean, nobody's even talking about it. Ladies and gentlemen, Netflix is trading right now with the close today $35 higher than where it opened up this year. You want to talk about bull market? This company is going to destroy the earnings. And I'm going to even tell you my strategy and what I'm thinking about doing for it before I reveal to you four other names. And the strategy I'm about to reveal to you is something that I'm considering to do on every single one of these five names. So they're reporting April 21st. Okay, it's not tomorrow, but it's relatively soon. It's already April 1st. If you guys did some horrible April Fool's prank to somebody and they strangle you, you probably deserved it. They are reporting literally one day less than 3 weeks from today on April 21st on the Tuesday. So what I'm thinking is maybe on April 13th, which is the Monday after this coming one, maybe just go like crazy out of the money calls into that week and see what kind of movement we can have. That's what I'm thinking because these numbers are going to be phenomenal. You have to understand that all the analyst consensus numbers are low. So the analysts are going to do one of two things, in my humble opinion. The analysts are going to raise expectations prior to the report because a lot of analysts are watching it. The analysts who are paid all the good money to give their 2 cents on Netflix are sitting there and they're thinking, this is the greatest blessing in disguise. This is the greatest silver lining to one of the worst financial, the worst financial pandemic ever. I mean, in terms of trillions of dollars lost in global economy. I mean, what are we talking about? 10, 11, 12 trillion? What's a few trillion among friends? So I'm thinking that this company is going to go up because, so this is my plan. So a week before they report, the analysts are either going to come out and upgrade it then, or they're just going to shut their mouth and not do anything until after the report. Usually you'll get a combination of both. Analyst consensus, $1.63 a share with 5.74 billion. Those are old numbers. Those are the numbers from the last report. That didn't take into account that people are sitting there in their underwears and ketchup and mustard stained shirts with bad hair and a long, long beard and poor grooming habits watching Netflix all day. Very, very bullish on Netflix. Next is a stock which is a little bit awkward because they're actually getting a little beaten up and it surprises me. Facebook. Now, now, Facebook is an interesting one because certain advertisers are going to get beaten up. Certain advertisers are obviously not going to advertise. The stock opened up at $206.75 on the year, obviously, before the bear market's down approximately 47 bucks from that level at the moment. People are sitting there. That's one of the main ways of communications, Facebook. And one thing that nobody is talking about with their advertisers are we have an election coming up. There are rumors going around. One of the presidential candidates even said it um, that we're going to have online voting. Could you imagine if coronavirus is there through November? How many people are going to be going out to the polls? All right, all thousands of you, I need you to stand 6 feet apart. But I heard the virus can travel 28 feet in the air based on an MIT study. Okay. Yeah, just stand on the highway. Just spread out in 700 acres to vote. Where do you think all the advertising is going to come from, ladies and gentlemen? Where do you think these politicians are going to try to reach out to people? Facebook. And looking at Facebook here, little beaten up alongside the market, fairly so. I think Facebook numbers are going to be phenomenal. I think people are spending more time on Facebook now than they ever have. And I think it's going to just become an integral part. Besides that, it already is an integral part of society. We're seeing that the companies that are being used when true disaster strikes, and Facebook will be one of them. Next, one of them might be making about $1 million a day per store because everybody needs to just go there and get all the things. You want to know the value, the true value? You want to know what's worth more than its weight in gold? Double ply toilet paper. And right now we go to Costco making, I'm betting they're making over $1 million a day per store. They are cleaning out. You don't realize people who can't go to restaurants have to buy food. People who are planning for this pandemic don't want to go out food shopping every other day. They want to buy things en masse. They want to buy 75 steaks. They are just cleaning the shelves off in Costco. Costco, again, beginning of the year, Costco opened up at 294.06. The stock is trading now at a 286.78. This stock is already weathering the storm, but what you're not seeing in Costco is this stock can potentially explode. I just wanted to real quickly before I go through Costco again, April 29th. On Wednesday, April 29th is when Facebook is reporting. I think they're going to crush revenue and analyst consensus as well. All these companies, I think so, think will do so as well. And I might be looking for calls like maybe even the week before. Costco, the thing with Costco is they're reporting June 4th. At this point, June 4th is the next time that Costco, April, hold on. Are you sure? June 4th? Yeah, third quarter. All right. So June 4th, they're reporting. That's a little further out, obviously, according to my list here. I'm not sure how accurate that'll be. But one thing that you have to take into account with all these names, the consensus and the revenue numbers were based prior to this pandemic. So when you have those numbers based prior on the pandemic, they're not taking into account that people are just basically using their arms and shoving all the food into their cart and leaving. This company is going to crush it. And same with other companies like you want to add in like Walmart and BJ's, but I like the Costco. So a lot of people who run their businesses in person are now using my next stock that's on my list, and of course that's going to be Zoom video communications, and a lot of people are using Zoom. I have a friend who runs an educational school in Brooklyn, and obviously he can't bring all the kids into his school, so he has everyone download Zoom app. I know somebody else who's a professional workout trainer who does the fitness classes, who stands in the front of the class, and they're basically she got laid off just like everyone else because nobody is allowed in the gym. So what she's doing is she's using the Zoom app to actually host her classes. This is one of the key integral products that have been being used. Now, Zoom is very recognized. These aren't like beaten up names. Maybe tomorrow. I mean, Zoom opened up this year at 68.80. The stock is trading at 137. It already doubled in value. But keep in mind that Zoom already was producing good numbers prior to this entire thing. So they actually last reported on March 4th, right over here, and they reported 15 cents a share. That beats the 7 cents expected. They had $188 million in revenue. Yes, this company does make money versus the 176.5 million in revenue. Now, here's where I think they're being modest. This is where my face blushes, and I'm like, oh, come on, you. They said next quarter they're going to make approximately 10 cents versus the 6 cents expected. They see Q1 revenue 199 to 201 million versus the 185 million expected. Nonsense. They are going to destroy those numbers, in my opinion. They don't even realize how much they're needed during this time. The longer the COVID virus lasts, this company becomes more exponentially important. They said for fiscal year 2021, they're going to make 42 to 45 cents a share. That's way ahead of the 30 cents expected. They beat across the board. They beat across every single metric. They destroyed it. And what's going to happen is after this coronavirus does leave us, people are still going to rely on this service because it's going to be comfortable for them to use this for meetings and other things. So what I'm saying is a lot of these companies that people would normally not use before, yes, a lot of them have large audiences like Netflix, yes, people were watching it, but the new audience for Netflix, the new audience for Zoom, the new people who are flooding through Costco buying everything, the same people who are on Facebook spending way more hours now than they have before, all that is going to increase revenue. And of course, I'm going to go to the last and fifth name on my list. And of course, ladies and gentlemen, it's Amazon. And you'll notice that I listed three of the five FANG names. I left off Apple and I left off Google because Google's with a lot. I think Google's going to do well. I mean, I think Apple's going to do well. I think all these companies are going to do well. But I think Amazon in particular is going to weather the storm better than most companies. Keep in mind, Amazon opened at $1,875 at the beginning of the year. Stock's trading at 1907. I mean, people are looking at these beaten up names. Amazon's not beaten up. Amazon is up on the year. How many companies can you say are up on the year? Take, for example, Apple, which needs to sell you phones. On January 1st, Apple opened up at 296. This thing is $56 down. On January 1st, Google opened up on January 2nd was the first day of trading, not first, but anyway, on January 2nd, January 1st markets close. It opened up at $1,348. It's $248 less today, pretty much than 250 bucks less than where it was when the market first opened. The only one exception I would say is Facebook, which is just not holding up as well as where it opened up at the beginning of the year. I think this one is undervalued as a result. People are not taking into consideration that Twitter doesn't allow political ads. Do you think political ads are going to be an important thing in the United States of America during the most heated, debated, dramatized elections ever in US history coming up? Do you think that Facebook, who allows political advertising, who has reach to over 1 billion people plus, you think they're going to get some revenues? So these are the companies that are doing real well. So back to Amazon. Now, Amazon has its hand dipped in a lot of things. I'm being told that a lot of people are using Amazon Web Services who are staying at home and are utilizing these things and working from home. Not only that, of course, the brown box deliveries, people are ordering twice as much from Amazon now as they ever had. One person told me he ordered more from Amazon last week than he has in the past 6 months prior. That is very understandable. Amazon is a trusted company to deliver you your brown box goods, whatever it is, you know. So you could basically order anything on Amazon, which is also the amazing thing. And not only that, there's Amazon Prime. So while you're on your couch watching TV, if you're not watching Netflix, you might be watching Amazon Prime. And again, the funny thing about the names I'm sharing with you here is that they're all performing. I believe even though they're outperforming the market, I think they are all underperforming where they should be because you see a lot of smart money. Look, there's a lot of smart money in Amazon, right? You have the biggest funds probably in Amazon positions and Facebook positions. Do you find it funny how Amazon is trading higher on the year? Do you find it funny? Nobody is mentioning that fact. Do you find it funny that Netflix is trading higher on the year? Zoom is obviously trading higher on the year. Costco is what? Slightly down $5 on the year. The irony is what you're going to see on their next earnings report is credibility of a bull market. and nobody's talking about it because it doesn't feel that way. Everybody came out, and when the market in the S&P was 20% off its highs, everybody came out, bear market, bear market, bear market. But when the S&P bounced 20% off their lows, you don't see people talking much about it. Yeah, there's a headline here and there talking about it, but nobody's talking about the fact that we're in a bull market right now because we bounced 20% off our lows. Where is that? Now I'm going to share with you a bet I made with a member in the room. He's from California. He lives in California, and I live in Jersey. We're both, I think he's from Brooklyn or he goes there often. I'm from Brooklyn. Here is my bet with him. My bet is within the next 6 weeks from last Monday, 6 weeks, a month and a half, that I think it's right over here by second, like after the second week of May ends, something like that. We will be, we won't retest the lows. And this is a very controversial topic. And everybody's looking and everybody's like, yeah, we're definitely retesting these lows. Everybody likes to say it. I find it funny how everybody likes to say that after we gap down today. I'll make a better argument that the lows are in. And I just want to make I'll be right, I'll be wrong. I'm not loaded in puts, I'm not loaded in calls. Right? I just want to make a bullish argument. And this is no April Fool's nonsense, which I never understood what's the point of April Fool's. Like, could you imagine in this quarantine environment, like you pull an April Fool's prank on somebody and somebody gets like shot or punched in the face? Like honey, I put cayenne pepper in your underwear. It's like, you did what? Like, could you imagine that? Anyway, which it's actually a pretty funny prank. I should probably do that and then see me with a black eye next time. Anyway, point being with this market is the reason why I'm going to say this market bottomed out is for one key reason. So, here's the bottom line. Here is the bottom line. You already see the U.S. response to dealing with this virus. We are stockpiling things that are even unproven to the US, proven in other countries, whatever. It's hard to get rapid test results. I know so many people are talking about science, and the truth is, when it comes to science, is even though these test results are needed to confirm it, the science was always there. It's just whether or not we confirmed it or not. Gravity always existed. The Earth was always spinning around the sun, even before we figured it out, right? So the point is, the U.S. likes to do a few things here, and I'm going to share my algo levels as I just finish this off here with you. The U.S. likes to pump trillions and trillions of dollars into the market. There are companies out there that are too big to fail. In fact, there's a company that's down 30% off its recent high that is inevitably, at least according to the president, going to get bailed out. That's 30% off its high. Does anybody want to guess the symbol real quick before I show it to you? It's correct. Very good. Boeing. Boeing was $186 last week. It dropped $56 on no further news. Companies that drop like this, the $56 drops, are going to be absolutely, to me personally, tremendous buying opportunities. Boeing is too big to fail. We produce U.S. jets. Can you imagine? Can you imagine if we just let Boeing fail? How quickly do you think China and Russia would be at our doorstep? Hi, Boeing, here, come over to our country. We got you. Yeah, how much money do you need? Oh, that's it. Here you go. Yeah, I'm sure that will happen. This company is too big to fail. I made the same argument many years ago about General Motors because they were making in our land vehicles, military land vehicles, from um, Jeeps to tanks. General Motors makes tank engines. General Motors is too big to fail. That's why when they were going bankrupt, the government was like, wait, hold up, chill out. Here, We'll take a portion of your company. We'll just pay everyone out. Boeing is too big to fail. I don't see it going bankrupt, like General Motors did, by the way. So, with that being said, and because they're basically being guaranteed money, and remember, a lot of these companies who took the money came out really well. Citigroup, JP Morgan, Goldman Sachs, too big to fail. So, you're going to have some of these companies that are going to present just phenomenal opportunities. Stay tuned tomorrow because tomorrow I'm going to share with you 5 companies that I think are hurting horribly with this coronavirus, which is a lot, but are going to rebound the quickest after this coronavirus leaves us. Not only that, for free, you could click the link in the video description out to overcome your psychological toxicity in trading. Take advantage. Not only that, you could reach out to me personally. Newsbeat, one word, Newsbeat at t3live.com. I answer every single one of the emails, 1% margin of error. I generally get them all. Email me. Let me know what's your thoughts on the market. Let me know what's bothering you. Let me know how I can maybe even help you. We have a strategy this Friday, which moved 500% in our favor in the last 30 minutes on Friday using a nifty little trick we do. Do you want to be part of it? Do you want to see what we do? We're planning on doing it this Friday. So I hope you guys stay safe and healthy, and I hope you guys enjoyed the Newsbeat show. Share it with your friends who are at home if you think they would enjoy such content. Happy trading, make money, and we'll see you guys tomorrow on the Newsbeat live trading broadcast. Have a wonderful, wonderful evening.